Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, good morning. Welcome to Good Morning Crypto, where we turn your early hours in the morning into your edge and financial freedom. Today, we're going to talk a little bit about an article that I found. It has an economist sentiment on the market for the past 35 plus years, and he thinks the economy is doing amazing and has been performing very well in comparison to other time frames, and we'll go over some data and see if that's on point or not. So it looks like David will be sliding in here shortly, but in the meantime, I'm gonna hop over to my screen share. Oh, let me get him pulled up. It looks like he's here. Hold on. Let me get it over to the dual screen. Good morning. Good morning. It is
Good
Monday,
morning.
sir.
It is Monday. Can you hear me?
Oh yeah. How you doing today?
All right. I'm doing fantastic. Trying to figure stuff out. All right. Hey, good morning. Yeah, I'm doing well. Ready to get this show on the road. I know I'm late, but
Oh, I tried to push it back a little bit so that we could get it all started together on a Monday, but
amazing.
you showed up right afterwards. It's all good though.
What's up?
I got extra time for caffeine this morning.
Caffeine? I got no caffeine. I just literally woke up.
Let me get that screen shared with you.
So you don't think the economy's doing well?
I don't think it's doing well in comparison to other time frames, because that was the key sentiment of the article, that the past 35 plus years have been the best time frame of the economy. And I'm not so sure I agree with that. You know, we've had some amazing times in the economy. If you just look at the past 250 years of America's existence, you know, we had the 1860s where there was a giant boom of industrialization, followed by the railroads right after that. Yes, your employment might not have been spot on to what we have now, but we also didn't keep amazing numbers back then, you know? But the growth in comparison then to now is uncomparable. 5% GDP growth to our 3. We're all rah about 3% when they were hitting 5% year after year after year. So, is it really better now than it was then? You go back to like
I don't make
post-war.
the rules.
Yeah, you go back to post-World War II. We did amazing for 20 years. Strongest economy that we've seen in like just our grandparents' lifetime. So,
I guess I kind of guess. Well, it depends on what exactly we mean by strength. Most consecutive months of growth, or what?
I mean, there's multiple
Of a certain percent of growth.
there's multiple metrics that they use, and I've got a little comparison that I've got pulled up that I can kind of go over when we get to the article. But I can swap
Beautiful.
I can swap over to the screen share so that we can run down our little intro so that everyone can get their information for the morning and we can get them prepped for success. So I've got the stock heat map pulled up. We've got your tech sector kind of sitting red after Friday's little move, which is kind of shown us the move that we were going to see on the crypto side of things that you were talking about. So Nvidia was down 2.13%. We've got Amazon down 1.67. ExxonMobil is up 2.68%, along with Tesla also up 2.45%. United Health Services is up 1.22. We got Eli Lilly sitting down 3.53. Microsoft is sitting down 0.76. Google is up 0.75. And Meta is sitting pretty neutral at down 0.08%. On the crypto side of things, though, it's looking absolutely beautiful. Look at that. Just a sea of red. And Bitcoin's down 3.03%. Ethereum's down almost 2% at 1.99. BNB is almost down 4%, 3.93%. We've got Solana down 2.63%. XRP's down 2.18. Dogecoin is sitting down 3.68. TON sitting down 1.37. Tron's down 0.77. Cardano's down 3.64. And we've got Avalanche down 3.47. So a sea of red for the morning, which is, not unexpected if you've been listening to this channel. So let's hop. Yeah. You're did you get your short?
I can't. Yeah. It's up almost 50%.
You can show the people when you're sharing your screen too. Might be a little bit easier to see.
No. I want to make it as difficult as possible.
Yeah. I love the glare. It was just so beautiful.
Just like market makers.
Oh.
I want to make it as difficult as possible.
So, for the economic data for today, we do have a Fed chair speaking at 7:50 a.m.
A Fed chair.
Yeah. This is Bowman.
Okay.
I believe that was the dissenting view as well on that Fed rate decision. So that's going to be 7:50 our time, which is 8:50 right before market open. We do have Chicago PMI coming out today as well at 8:45, so 15 minutes after market open, as well as Dallas Fed Manufacturing Index, which both of those should be decent market movers. We have one that's predicted to be slightly up and one that's predicted to be, decently down from, or decently up from its negative 9.7 to negative 4.5. So making a little comeback on the manufacturing, which is just what we kind of want to start to see with some of the rate cuts that have been coming. We also do have later in the day Fed Chair Powell speaking, which was not actually scheduled. This is going to be an economic sentiment for his thoughts on the economy. This is coming out 12:55 my time, so looking like 1:55 Eastern time. So definitely going to be a big market mover, and kind of ties in with our article for today about, is the economy in the best position it's been in 35 plus years. We do have the liquidation heat map here with some liquidity sitting right below us at 63,615. We should probably refresh that page because I pulled that up this morning, and it looks like we wiped that out finally. That's kind of what I had my eye on for a little a bounce point. So we will see if it ticks back up a little to claim some of the liquidity at 64 200-ish. It's 64,190 to 64,200 is the liquidity that's sitting above us. We do have a little bit more sitting above us at 64,898 and 65,62. So 2 points above us. To keep an eye out for liquidity, we do have the fear and greed index for the stock side of things sitting at 68. You know, just some light greed, which isn't very unexpected for going into this week, as we saw some decent moves up. Crypto is sitting down 2 points, still in greed, just very, very light greed, 61 on that fear and greed. Yeah, but like, this is what we want to see, you know, moves up, slight greed, that pullback, the slight pullback, where we stay in a pretty neutral based sentiment. You want the moves up without ticking into extreme greed, because that's that signal that when we do get bigger moves up, people aren't going to be as greedy about it. So I can either toss that over to you so that we can go over the Bitcoin top to bottom, or I can hop into that article real quick, whichever works better for you.
Let's hop into the article.
All right. So, U.S. economy, there is no denying it, among the best performing economies in 35 plus years. Mark Zandi is chief economist at Moody's Analytics. He posted over the weekend a glowing review of the U.S. economy. I reckon there is a big warning in this, but first, here is what he said in the brief. With last week's GDP revisions, there is no denying it. This is among the best performing economies in my 35 plus years as an economist. Economic growth is rip-roaring, full employment, inflation is fast closing on Fed's 2% target, household financial obligations are light, corporate profits are robust, and stock market is hitting a record high on seemingly strong daily basis. I've hesitated to say this at the risk of sounding hyperbolic, but with the last week's GDP revision, there is no denying it. This is among the best performing economies in my 35 plus years as an economist. Economic growth is rip-roaring, with GDP up 3% over the past year. Unemployment is low at near 4%, consistent with full employment. Inflation is fast closing in on Fed's 2% target. Grocery prices, rents, and gas prices are flat to down over the past more than a year. Household financial obligations are light and set to get lighter with Fed's cutting rates. House prices have never been higher, and most homeowners have more equity in their homes than ever. Corporate profits are robust, and the stock market is hitting a record high on a seemingly daily basis. Of course, there are blemishes as lower income households are struggling financially. There is several shortage of affordable homes, and the government is running a large budget deficit, and things could change quickly. There are plenty of threats, but in my time as an economist, the economy has rarely looked better. So, what's my warning? Well, twofold. The Fed is slashing interest rates, 50 BP basis points so far, and plenty more to come, so we are told. China is rolling out significant stimulus, and with more over the weekend. Not arguing with Zandi, I think he's right, but perhaps the FOMC should take the foot off the accelerator, or at least lighten its touch. You know, we've definitely talked about that one, you know, where they need to steer the market, because while, you know, we are at an all right point, we talked about the dissenting the Fed chair's view, where, you know, your job numbers are at the rate that they would like to see for full employment, which full employment does not mean full employment. You are going to see some unemployment, But to say that this is the best in his 35 plus years, what about the 90s, where you saw 4.5, 5% GDP growth, and that's within the past 35 plus years, where he's saying best in 35 plus years? I mean, yeah, it was
Best
dot
all
com,
around.
but
It's
going
like
up.
is or LeBron or Jordan, right?
I
It's
mean,
like LeBron's best all around,
eh,
but
I,
Jordan was just the best.
I mean,
I don't know. Jordan had great defense.
and that's completely discounting Shaq. I know no one gives that man any credit, but whatever. Um, but like his metrics, where it was GDP growth, the Fed's target for inflation. You have housing prices. You have what was the other one? The affordable housing availability, the stock market, um, the numbers that it's hitting. All of those are very comparable to your early 90s, where you had higher GDP though in the 90s. You had stock market also hitting all-time highs because, everyone was in the stock market. You had housing prices at all-time highs and continued to grow through the rest of the 90s and into the early 2000s. So it's very arguable that this is the best time in his 35 plus years. Well, it's like even I can remember, yeah, I was a kid, but yeah, I can remember times where things were extremely good. Nobody really thought that anything was bad was gonna happen, and then bam, '08. So is that kind of what
9/11.
what there is that too? But like, is that what we're setting up for? Because if you look at just our recent history, that's kind of the cycle where we go into really robust times and then everything just gets poo-pooed on.
Yeah, I think we're looking at an everything type of move. I think we're more like in 1995, and we have like 5 more years to go, 4 or 5 more years to go, at least broadly speaking. And maybe, but it looks like we're starting to get an everything bubble as it is, with Bitcoin starting to get moving. I We'll see where Bitcoin goes, but I still think it's going to wrap stuff up within a couple of weeks by at least and then we finished the year off strong. But you got gold going, you've got silver going, precious metals, you've got everything, just about everything going. The dollar tumbling, right?
Yep.
So it's just kind of like, how long does this last, and how high can it go? And are we going to get little small corrections along the way, or giant corrections? Are we going to get a giant 50% correction like we did in 2008 after everything started going crazy? I don't know, but I think Powell today is kind of going to nudge us in the right direction. I think he probably thinks he was a little too hawkish, because we saw what should have happened with the bond yields was they turned up, I believe, and they should have went down after the last FOMC. It's like
So
he was almost too hawkish.
what you would want to have seen with the rate cuts is that bond yields tick back up, meaning that people
Yeah,
are
they went
selling
down.
them off. Yep. And instead they went down, which meant that people did not believe that a 50 basis point cut was a good thing and that you should park their money in safer assets like bonds.
I think today he's gonna talk them down. Like, I need y'all to calm down. I'm not hawkish. I'm dovish. I promise.
Well,
Look, I said everything's fine. Believe me.
I don't believe him. And I haven't believed them for a fat minute. You can't print trillions and trillions of dollars in 2020 and then just be like, it's all good though, bro. Like, it doesn't work like that. And like,
Printing money is necessary.
is it though?
is.
I'd
Thought about it.
argue burning money is more necessary than printing money, because here's the thing. if you burned the money that you're supposed to burn.
Energy.
Yeah, well, like, here's the thing. You burn that money, you're increasing the value of the dollars that are currently existing in the system, meaning that your smaller divisions of money now have more power. And that's
You're
what
making
you
things
see.
more expensive.
No. Well, no. Because, okay, so you take it in Bitcoin,
Yes.
where it's...
You making it more expensive.
It,
That's what you do. That's what you do. That's what deflation does.
but
Over
it, that's
time.
not... But that's not...
You hold on to your money, but you hold on to your money, and you can't afford to buy anything because and once you start buying everything, I mean, the supply comes down, and then everything becomes even more expensive, and then it just becomes a cycle. I mean,
Well,
which
that's...
cycle do you want? Do you want a
That's...
cycle of deflation or inflation?
So, like, both
People
of them...
act like we haven't been doing the economy for thousands of years, like it's some kind of crazy sorcery or something. It kind of is.
Well, like,
It's just kinda like,
inflation...
you got to manage it.
Inflation is what will make things cheaper. Whereas in, like, as you see with Bitcoin, where it's like there's
Inflation
that inflation of either... Okay, so inflation of things that you're buying means that everything will continue to be more expensive. But if you're decreasing the money supply at the same time, that means that your dollar becomes more valuable, which this is what you see in, like, Ethereum with a burn mechanism, or Solana with a burn mechanism, where it's we are fighting the inflationary of our money, which is something that the US dollar doesn't do. Because, yes, they burn money, but they're also printing more money than they burn. Meaning that so if you go to the store, do you remember when you could get your 5 stick of juicy fruit for like 25 cents?
Mm-hmm.
You go to the you can't do that anymore. Which means that instead of your money becoming more valuable over time, it's becoming less valuable over time. But if they continue to burn at a higher rate than they're printing, then you could still get that stick of gum for 25 cents, but it's increasingly more valuable. You're still spending the same. It's worth more, though, because everything's being more valuable. Your money's more valuable, and that thing is still more valuable, but it's still the same price.
Why would I want the stick of gum to stay the same price? Why would I want a stick of gum to be stay valuable?
No, you would want... All that means is that your money is staying at it's increasing in value, so that means that everything else is increasing in value, but you're not changing what you're spending. That would be the real target, where it's like, I go to the store, I spend 25 cents, I get my 5 sticks of juicy fruit, and it's always that per continuum. But the value of that stick of juicy fruit is increasing, meaning that your dollar's stronger against other currencies. So if you had Canadian dollars, instead of them spending 25 cents in their dollars, they'd be spending $1 or something like that. That's strength that you want to see in the economy, where that's not deflationary or inflationary. It is on target with current growth. You still get growth. Your dollar is not devalued. And that's what you want. Instead of being like, okay, well, I'm making this amount of money. I'm getting my 2% growth for inflation. But, like, I'm still spending the same amount dollar per dollar because my government isn't complete crap at how they decide to print money. Everything's more valuable, though, because your dollar's going up in value. So,
yeah, I don't know.
It's a little complex, but really simple when you get down to it.
It's a little too complex for my brain that's only been awake for less than 30 minutes.
Well,
I don't know. I think inflation is necessary psychologically, because I think people need to have a reason to continue to work and continue to innovate and to continue to push. Yeah, if everything just stays the same price. I mean, I don't know. It's kind of just seems kind of Ayn Rand silly high school economics ish to me. Like we're not we're way past Ayn Rand, guys. We're in a global economy. We've got multiple different factors to consider, and that's why we have Bitcoin to kind of put everything kind of under one umbrella, and kind of start giving us a deflationary type of thing against all of our debt. I think our problem isn't necessarily anything other than our debt, our credit debt, and stuff like this. The actual fake money, you know. I mean, people joke about fiat and the dollar and all that stuff, but the actual fake money and credit and debt, and the credit. I know the dollar's debt, but hear me out. I'm just saying the credit where they give you the fake money. That's a really big issue, in my opinion. Can't give you fake money. That's why I don't like meme coins, because it's fake. It's not real. It's just a high. It's just to give. It's just a gamble. It's not an investment. It's garbage. So, what do we do about the inflation?
uh, I just
We
buy Bitcoin.
we raise wages, and by we I mean corporations need to raise wages. That's what they need to do. Instead, they push out all these talking points to get us arguing about other things that have nothing to do with the real problem, which is wages and price, and them not paying people what they should be paying people. Instead, they're skimming more off the top. Margins are pretty good, when you don't adjust when inflation comes down, and you don't move on to wages. You don't pass that down in wages. Sorry, I'm a little personally uh dealing with some stuff with my own place of business or work. So, um,
Well, that's what.
if wages don't go up, it doesn't matter.
Mhm.
So it doesn't. None of it matters. These people will just they see the prices, they see the inflation, they run off the narrative. Maybe give you a little bump, but it has nothing to do with inflation. It doesn't keep up with inflation whatsoever. And meanwhile, they're sitting there still making record profits, and skimming more and more off the top, and not passing it down to the worker. But I think we are kind of in a time period where that is kind of starting to change, and I think the economy is in a good place to see that change. But we'll have to wait and see. We've got a lot of work to do. So
Most
yeah,
definitely. Do you want to give the people the Bitcoin
Bitcoin.
rundown?
Here comes the Bitcoin rundown.
Oh yeah. Show the people's what's up for the day.
All right, Bitcoin. Right now, we're just sitting on this trend line, moving to the upside. We did break it though, so that's the first sign of, oh no, we might be at least having a pullback. We also have these, we went over this peak seeker, but we ended up printing another peak seeker over the weekend. That looks like big googly eyes of a monster. I don't know. We have our volumetric is in the green, so that's still looking good. And our what do you call it? Our money flow has flipped green as well, so that's looking good on the daily chart. But just because it's looking good on the daily chart doesn't mean that we can't see some pullbacks, or things can't just roll over from here. I mean, we'll I don't know. But we are bounced. We did get a couple of bounces on the trend line, and then we have fallen through. So now we wait to see if we could establish another trend, or if we could break this high here, get back above that high, and not come back into this range. If we were to do something like this, I would kind of expect move another move down. We could be looking at a couple of weeks or some days to weeks before this thing really gets ripping and roaring. Just because a lot of indecision in the market. We do have J Powell speaking today. We've got a lot of jobs numbers this week that I don't know, will either boost or break the market down. We'll see. But We've got the election coming up on November 5th. The next FOMC is 2 days after that on a Thursday. So I don't know. I I think we're at a point where it's kind of just like, well, let's see what happens. But I think to this week is going to be a pretty big week with all the jobs data. And with Powell speaking today, I think that'll do a lot. So that could turn this whole ship around. We could see that big thing spike down, come into this pool of liquidity that I'm looking for, and this thing just rips off. That would invalidate my forecast. Let's go ahead and bring up the forecast. Let's first go down to the 4-hour. And now let's bring up the forecast. Let's see what we're looking at here. All right, guys. So all the way back here on the 8th of September is when I drew all of this out, and everything has played out basically to a T. Did not get up to that point of control. Did sweep that August high though, that we have been talking about. So, and now we're getting a sweep. It looks like we should be getting a sweep of this consolidation range right here, that I have called a power of 3 move, potential power of 3 move. What is power of 3 move? Let me see if I can find it over here. There it is. Power of 3. Let's go ahead and zoom in a little bit more. Now, for the power of 3, it's basically a consolidation, a manipulation move, and then a distribution move. That's what I'm looking for. I don't know why this thing is stretched so far out. This is supposed to be like this. All right. There we go. All right. So, and basically, essentially, it's a consolidation range, manipulation above the highs to draw in as many buyers as possible, and then to dump on their heads. Now, this thing could crab walk even more. Maybe we tap that liquidity down here, and then we crab walk, and then we move to the upside and hit that point of control. We take it day by day. We'll see how it goes. But right now, we're just trying to find a lower end target to bounce off of, which will be below these lows here, I think, in my opinion. We should see price come down below these lows, because there's going to be stop losses and whatnot there, which means there's going to be liquidity there. So I would expect the price to come down a little bit lower. Let's go ahead and turn on some macro channels that I have drawn on here. So if we zoom out, we can see I've drawn out these macro channels. I went through a lot yesterday and was like, let me break this down in as many ways as possible, save it up in my object tree on TradingView so we can get a bunch of different interesting looking views on here. All right, or ways to look at the charts anyway. So we do have this channel, all these channels that I drew out here, and it lined up almost perfectly. It's beautiful. But yeah, on the lower end here, I think we can get to $62,200. I mean, that's just what it's looking like there. I say on the low end. On the low end, we're looking at 58. But as far as today, or on the before we get a little bounce, a little recovery bounce, I think we can get down to this first channel here, previous high over here as well, and that helps us tap these lows also. So looking at around $62,000 on that. So I could definitely see price getting down to 62K, and then we'll see what it does from there. I mean, if it doesn't bounce hard, then we might see it falter and continue lower. Of course, my forecast still says we're going lower, and I think that's exactly what we'll do unless Powell has something else to say about that today. He kind of threw a wrench in my whole thing. So we'll see what he has to say about that. Something that I've also that I found last night, I say I found, but that I looked at last night was our fixed range volume profiles on time based. Okay, so I've got one that's for year to date, one that is the yearly, so from January 1st, and one that is quarterly. And I did not mean to click that. All right, there we go. So quarterly, we can see that our point of controls, which is where the most volume has been traded, moved up, and then excuse me, this quarter has moved down. So this could be a nice area of support down here at $58,000. I'm seeing 58 come up a lot. I think we might see us get down to that 58. But if I pull up the let's pull up the yearly chart, we're sitting right at the point of control. This is since since January 1st. All the volume since January 1st till now, sitting at the point of control is where we are. So that would have been a natural target for after we break out, we come back down, back test that point of control. And then lastly, we have year to date. So from September 30th of last year to today, we've come up to the value area high. We are sitting on this high volume node. If we lose that, it almost seems like it's inevitable that we're going to just fall all the way down to this next level to 50K. We did get a close above the value area high, but we have since fallen through, and we've fallen back into the value area. Typically, when you fall back into value areas, you're going to go down to the next level of where the most volume is, and that is at the point of control, which is at $42,700. So, not saying that that's where we're going to go. I'm just saying that that would be a logical place for us to go if we were to lose some support levels here. So yeah, it's kind of that's all I've got for now. I mean, I've got more, but that's all I've got for now. Save the rest for later. Keep you guys posted on everything over in the Piper Academy Discord as much as possible. Back over to you, BC.
Well, I do like that you had talked about that 58K range. Let me get the right screen pulled up.
Hey, that's the wrong screen, BC.
Yeah, definitely. I don't know why it switches back and forth on me. Here's the right screen. So, I've got my Bitcoin chart pulled up, and on this move up, we created a fair value gap sitting right there underneath 58K. It's sitting at 57.3. The midline of that for a nice little bounce is almost exactly 57. And underneath for the bottom side of that was 56.7. So just a nice little point to come back to. The mid-range of the channel that we've been in is sitting right above that. So if we take some time, we could end up pulling back down to that and seeing that kind of cross for a nice little bouncing point. And that's looking around the 11th would be when it would cross. So, right after the election. So, kind of timing out decently for a move up and a bounce on that. I was looking at the NASDAQ this morning. We created a gap back here on September 24th, and it's kind of primed for a little pullback to that gap. You did see some wicking into it, but there was heavy buying pressure. So would be a nice thing to pull back and close that gap. We do see the MACD curving on the upside, kind of touching right there. So could be a nice crossover and a pullback to this 17,000, which was right there on that selling pressure wick that we saw that made this gap. You do have your prime oscillator that printed, if you can kind of see, there's a bearish divergence here. You do have very light money flow switch into the green, so could easily switch back red. You have curvature on your prime oscillator as well, where all of this is kind of looking primed for a pullback into this gap and maybe a closure of it. I also would like to look at silver. You talked about that. I went to a gun show this weekend where they were selling some silver and the prices were just a little too good to pass up on. So I bought some physical silver this weekend instead of buying guns. So you do have this down here on your prime oscillator, which is showing a reversal signal as well as some divergences. So your MACD is kind of crossing to the point where it's at that zero line. So that 786 or the did end up getting broken and could see a nice little pullback to that 30.8 range for another bounce to try to reclaim that 786. If not, I would look at us coming all the way back down to our golden pocket, which is sitting at $30.52 before trying to make another move up. These are going to be the assets that people look to, like gold, to put their money in when they don't have good sentiments and they want long-term growth and safety. So just something to keep your eye on. I don't know if you have another asset for the people. We've got 4 minutes before we got to roll out.
Yeah, I just want to wrap it up real quick. Let's see. Let's do the. This is the XRP chart. I made a joke yesterday during my live stream over on my channel, and about how every time XRP pumps, I might have said it this Friday on the show too. I don't know, but every time XRP pumps, expect a Bitcoin dump because it happens every time. Because XRP can never get going without. Excuse me. Goodness, just that early morning allergies. Yeah. Every single time big XRP pumps, I expect a Bitcoin dump. Until we start getting later and later into the cycle, because that is when XRP really gets ripping. Is later in the cycle. So, once XRP started ripping, it was kind of like, all right, where's the pullback? Because it's just history, man. Just go back and look at every single one of these pumps, and they don't end until Bitcoin starts dumping. So even this little one, it's like, oh yay, XRP is going to the moon, and then Bitcoin, I was like, just wait for it, the dump is gonna come on the way, and that's what we're getting right now on XRP. But it is coming back down to the triangle. I'm sure it's going to test the triangle. It's already testing it. So, and this is a multi-year. This triangle is from April of 2021. So that's a multi-year resistance getting broken. So that's not insignificant, but that doesn't mean we can't come back down and waffle around and then move back to the upside. But we'll see. I mean, let's go back to the dual screen and talk this thing out. Yep.
And myself unmuted.
There we go. So, yeah, I think this week is just, it's going to be a pretty crazy week. I think Powell might talk down or talk up markets this week or today. I heard Meet Kevin saying it's going to be he's calling it a humble dove, is what he calls it. So maybe we can expect to see a little bit of dovishness out of Powell, and if job numbers are good, then we could see. We got something today, don't we? On what did you say? I think we have something today.
It's
data.
Manufacturing data.
Okay.
So
We'll see how that goes.
It's predicted to be better, so that's something that's good. We also have manufacturing data tomorrow as well with JOLTS jobs. So, it's kind of early off of the rate cuts to feel like they impacted the jobs numbers, whereas it's more likely that people are getting hired because of seasonal things like, there's a giant uptick in jobs around here where we've got the Halloween stuff going on, where I know this past weekend was the first opening for the pumpkin patches around here. So you see jobs like that starting to open up. So people are getting hired for that. So
I mean, it's that time of year when you start seeing jobs an increase in jobs because people are looking for work or extra money so that they can buy, themselves, their boo, or their kids something for Christmas.
Oh yeah.
And where they could go and they can buy, Thanksgiving dinner and stuff like that. So, and buying costumes for Halloween. It's that time of year when it's time to spend, spend, spend. We'll see how it goes. Maybe that'll help further the economy along. As people spend more money, companies can take in more money. They can start hiring more people. They can start producing more stuff and all of this and that. As long as China doesn't take us out with their deflation, we're good. I think. Well, I think everything is on a good path. But we'll see. We'll see. Anything can happen.
We will
That's
definitely
that's why
talk.
they call them black swans.
Oh yeah, we will definitely talk about that China stuff tomorrow too,
Yeah,
because
yeah, yeah.
I got an article pulled up all about it, and I've been building my my data points on it, so we will kind of see tomorrow how that
Excellent.
might affect the economy over the long run.
Oh yeah, and my whole point of that was to say that this whole market could my forecast could turn completely against me this week. We'll see though.
We will definitely see. Could be a very volatile week, you know.
Yeah, but yeah, thank you for joining us. I appreciate every single one of you for stopping by and smashing that like button. That means a lot to us and helps boost us in that YouTube algorithm. So hit that like button on your way out, and I hope you all have an amazing, wonderful, beautiful, radical day. And yeah, that's all I got, BC.
Yeah, thank
It's
you.
Monday.
Thank you for tuning in this beautiful Monday morning. Tune in later today on this channel at 8:30 Eastern Time. We will have Piper and OC Guy with the morning market report. And also tonight, your crypto nightcap is coming back. Well, that will be with TradeFly and FD White. That is at 8:30 Eastern Time. So tune into that one as well. There will be lots of data for today. They will be able to give us the market sentiment from Jerome Powell tonight. So that'll be a big one. If you haven't hit that like and subscribe button, make sure to do that and check out the links in the description as well. Other than that, trade safe and use your stop loss, as Piper says, because could be pretty volatile off Jerome Powell.
Yeah, watch Piper. He's one of the few people in the space that actually understands the economy. So.
Oh yeah, oh yeah. Other than that, I hope everyone has a good day and wake up.
Because today's gonna be a good day.